Morning. Welcome to this morning's Interactive Brokers Morning Market Morsel for Tuesday, January 22nd. We're back from the three-day weekend, and markets aren't feeling quite as sanguine as they had been over the last few trading sessions. I think a lot of that has to do with the expiration week having passed. I think a lot of the rally that we saw during last week was because it was a major expiry. There were a lot of strikes with a lot of open interest. And with the kind of volatility that we'd seen in both directions, you had people trading through strikes, and a lot of times that sort of volatility tends to feed on itself as you get into an expiration week. I think that was no exception. And yet here we are after a three-day weekend. We've gotten some bad news about China growth. We're seeing oil sell off, and then we're seeing the U.S. markets following through. I think today one of the takeaways is some market don'ts. You hear all sorts of market do's, do this, do this. I think it's just important to know what you shouldn't be doing. And I think there's a couple of don'ts that you should be focusing on in today's trading. Don't follow stories if you don't really know what's going on. I think the investors in Arconic learned that lesson today. There's been all kinds of talk about Arconic putting itself up for sale and all kinds of potential buyers. Bottom line is you don't have any clarity into this. I should say the average investor doesn't have any clarity, and I believe if you're watching me, you probably don't have any specific insight into the inner workings of what's going on in the Arconic sale process. And these things don't always work out the way you want. I've seen it various times where the market gets ahead of itself. The market bids things up to a price where the buyers just don't care. That's part of what happened today. The pricing got expensive, but it's more Arconic pulling out. They didn't like what they saw. Like anything else, there's a bid-offer spread. Don't chase a story too far. It's very exciting to trade these stories. The financial press loves to talk about them. But realistically, if you don't have any real insight into the corporate valuation or the mechanics of the process, it can be very dangerous to get involved in a situation like that. Another don't is don't trade weather. Oil is down today. Heating oil, natural gas, all the products. Part of that is, and I think the biggest portion is, Chinese demand reports over the weekend were not very good. That spills back into demand for petroleum. Halliburton made some negative comments in their earnings release. That's not good for oil and oil services companies. But also, I think on the natural gas and heating oil side, you had people chasing weather. There were, of course, the reports of bitterly cold weather, and if you live through it, you don't have to be reminded of how cold it was this weekend, at least here in the Northeast. But it's almost another buy the rumor, sell the news scenario. Again, everybody's watching the same weather forecasts. Everybody knows it's going to be cold. And so again, unless you've got some special insight that, oh, the weather is going to be colder than everybody anticipates because of X, Y, Z, it's probably best not to be trading something that's that in the market. I don't want to necessarily counsel you to fade a story like that, but that often works because, boy, if there's one subject that everybody loves to talk about, it's weather. Is that something you should be investing in? Hard to say. So good luck in your trading for the rest of today. We'll talk to you shortly. Take care. Bye-bye.